Welcome to CNN Vantage Point. I'm Monica Fox, Senior Investment Assistant with CNN Wealth Management, and today's podcast will provide a market review for the month of June 2026 and our current outlook. June was a constructive month for financial markets as investor sentiment continued to improve following the volatility experienced earlier in the year. U.S. equity markets broadened their advancement as the S&P 500 equal weight and Russell 2000 indices reached all-time highs. They returned 2.3% and 3.7% respectively for the month of June. Markets were supported by resilient economic data, solid corporate earnings, and easing concerns surrounding energy supply disruptions. While inflation remains above the Fed's long-term target, moderating oil prices reaching a June low of $69 a barrel helped alleviate some concerns that higher energy costs would place additional pressure on consumers and businesses. Market participants continued to monitor monetary policy developments closely. The Fed left interest rates unchanged at its June meeting, acknowledging recent inflationary pressures while the economy remains on relatively stable footing. Treasury yields moved modestly throughout the month as investors balanced inflation expectations versus mixed economic signals. One of the most notable market events during June was the successful debut of SpaceX, which became one of the year's most closely watched initial public offerings. The strong reception reflected renewed investor willingness to participate in new offerings and was viewed as a positive sign for broader capital markets activity. Following its June 12th IPO, SpaceX was added to the preliminary Russell Core, Growth, and Value indexes. Russell membership is based on the company's total market capitalization of approximately $2.41 trillion. However, its index weighting is determined by float-adjusted market capitalization, representing a float-adjusted market value of approximately $97.6 billion. Overall, June highlighted the market's ability to look beyond near-term uncertainty, with investors focusing increasingly on corporate fundamentals, earnings growth, and the outlook for economic expansion. Second quarter earnings estimates project the S&P 500 earnings growth of 23% year over year for the second quarter of 2026, according to FactSet. The investment environment remains supported by resilient economic activity, healthy corporate balance sheets, and a labor market that continues to demonstrate underlying strength. Inflation has drifted higher as a result of impacts from the Iran conflict. The June headline CPI was 4.2% and the core CPI 2.9%. Policymakers remain cautious, suggesting interest rates may remain elevated until additional progress towards inflation targets is achieved. June is known as a seasonally weak month, and this year was no exception, as the S&P 500 index returned a negative 1% for the month. However, the broadening out of the U.S. markets is constructive in our opinion. We do not expect the Fed to lower rates in the near term, but more importantly, we do not foresee them raising rates. This should give the equity markets room to grind higher if corporate earnings continue to deliver. We view the current environment as balanced between risk and reward. Therefore, we made no portfolio changes in June. Portfolios continue to be neutral equities with a tilt towards large cap, and our fixed income positioning remains slightly underweight duration and continues to favor investment-grade credit quality. We'd like to remind our listeners that market conditions can change quickly. As circumstances and facts change, CNN's market views and portfolio positioning may change accordingly. If you would like more information about our current positioning and market thoughts, please contact any of our wealth management advisors. And if you liked this podcast, we'd be grateful if you would share it with your friends. On behalf of the entire CNN Wealth Management team, we thank you for listening.
Please note, views are subject to change based on market conditions and other factors. These views should not be construed as recommendation for any specific security or sector. Client portfolios may or may not be at the positionings discussed due to, but not limited to, distributions, tax management limitations, systematic purchases, etc. Some products are not FDIC insured or guaranteed, not a deposit or other obligation of the bank, not guaranteed by the bank, and are subject to investment risk, including the possible loss of principal amount invested, and are not insured by any other federal government agency.